It's a trading day, and here in Business Incorporated, we do have 55 minutes to take you around the world of business. Here's what we have prepared for you. In Kenya, the liquidity status has been boosted after that country paid early bond repayments. And Egypt has increased its crude production capacity by over 4,000 barrels per day. We do have plans to share strategies on staying safe online. Now everything is online. You're welcome to the program. I'm Ini John Mekwa. We'll start off from the global space. Oil extended gains on Tuesday, lifted by hopes of improved economic activity after the U.S. and EU trade deal. A potential U.S.-China also going on. Second day of conversations is today. So look at the numbers for this afternoon. It's in the green, 0.34% for Brent at $70.28, retaining the price it had earlier today. For WTI, it's also up 0.33%, taking it to $66.93 a barrel. Both contracts settled more than 2% higher in the previous session, and Brent touched its highest level since July 18. That happened yesterday, Monday. The trade agreement between the United States and the European Union, while imposing a 15% tariff on most EU goods, sidestepped a full-blown trade war between the two major allies that would have rippled across nearly a third of global trade and dimmed the outlook for fuel demand. Oil prices were also supported by a possible extension of a trade truce between the U.S. and China, with top economic officials from both countries having met in Stockholm on Monday with a promise to have a second meeting today. They met for over 5 hours. Meanwhile, Trump set a new deadline on Monday of 10 or 12 days for Russia to make progress towards ending the war in Ukraine or face sanctions. Still in the oil space, but back here in Nigeria, we report that Nigeria is now a net importer of crude from the United States. The Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane, believes that one way to balance that trade is curb importation of refined products. He's asking that demand should be channeled towards domestically refined products.
Patronize Nigerian products, then if there's a shortfall, you import, right? And so he didn't say ban imports, because whether you like it or not, this is the largest single refinery in the world. There's nobody in the world that can produce refined products cheaper than what the Dangote refinery is producing, because of cost, location, and everything. So all he's saying is that, look, extend this Nigeria First policy, just like in the United States saying Make America, extend the Nigerian First policy to all segments. You can import if you want to import, but you will lose money, because the cost of production is one thing, the cost of transportation is the other, and then your margins and all those taxes. So I think like the media at times get ahead of themselves with what we call misguided enthusiasm and try to misrepresent the fact. The fact is that anybody who has invested $23 to $25 billion, remember that the Nigerian economy is $250 billion.
Away from oil and gas, now spot gold held its ground at 3,318.79 per ounce. Bullion hit its lowest level since July 9 in the previous session. U.S. gold we see edged 0.2% higher at $3,317.50. Top U.S. and Chinese economic officials, we know they are met in Stockholm for more than 5 hours, aimed at resolving long-standing economic disputes at the center of trade war between the world's two top economies, and they're seeking extension of a truce by 3 months. The U.S. struck a framework trade agreement with the European Union, imposing 15% import on most EU, half of the threatened rate, and averting a bigger trade war between the two allies that accounts for almost a third of global war. Investors are also waiting for a set of U.S. macroeconomic data this week, including inflation figures and employment report, alongside the Federal Reserve. They begin their two-day policy meeting later on today, so decision is expected tomorrow, largely pointing to rates being held. Small silver was down 0.2% to $38.10 per ounce, while platinum gained 0.5% to $1,396.35, and palladium lost 1.2% to $1,231.55. Putting action into words is what the federal government is doing through the National Credit Guarantee Company. This company is supposed to guarantee loans and funding to small businesses, and that came into Lagos to do some enlightenment with stakeholders.
So I want to say welcome again to this.
Nigeria's drive to unlock access to finance for small and medium-sized enterprises is gaining grounds as the National Credit Guarantee Company ramps up support to lenders across the country. The company, set up to reduce risks for banks and financial institutions, offers credit guarantees to encourage lending to businesses that would otherwise struggle to access funding.
These macroeconomic headwinds, coupled with inherent structural inefficiencies, have created a complex environment for credit access. Amongst the most affected are MSMEs, which form the backbone of Nigerian economy. According to the MBS, 40% of MSME make up the bedrock of our economy, contributing approximately 48% to GDP and accounting for a vast majority of employment, yet they face constraints in accessing credit.
For effectiveness, economist and founder of Adedipe Associates Limited, Dr. Biodun Adedipe, is asking for more enlightenment on the program.
Now, for me, the credit framework in Nigeria, some 20 years ago, when we were working on the MSS 2020, envisioned credit to be pivotal to our growth. Yet, this event today, for me, is an epoch. They said that it is like re-engineering the Nigerian credit market as we interrogate credit guarantee as two things. It's a tool, and then as Jeremy said earlier on, it's also a catalyst. So in which case, if we look at that in context, then we are in the process of reimagining the role of credit in industrial growth of Nigeria.
A panel discussion, which includes manufacturers, explores strategy for de-risking MSME operations and boosting business growth.
One of the issues that for the past 2 years has shown up as one of the most critical issues that manufacturers are dealing with, which is access to credit, is being addressed in some form. In MAN, we have what we call Manufacturers Confidence Index, which we do every quarter. And in the last 2 years, it has indicated that access to credit has overtaken the cost of electricity in terms of the biggest challenges that we have.
To achieve this, the NCGC is calling for stronger collaboration among MDAs, DFIs, fintechs, cooperatives, and the private sector to build a credit ecosystem that listens, learns, and leads. And with the talk of industrialization catching up around the world, aluminium becomes a widely used commodity in a variety of industries, from construction to aircraft and infrastructure. We see aluminium top on the list. And then we see in 2024 that global aluminium prices went up 7.5% and are up another 5.5% this year, reaching another high of 2,636 per ton. The U.S. president, we know he has talked about imposing a tariff on aluminium imports, and the U.S. being the world's third largest consumer of the commodity. Let's find out more about this with Emefiele Onyelukachukwu. He's an analyst with financial derivatives company. Emefiele, you're welcome to the program.
Thank you, Ini, for having me.
Great. So, how much involved or how much impact can we say, or how active is Nigeria in the aluminium value chain? We know President Trump is talking about 50% tariff, and it's a major commodity when you talk about industrialization. But how involved is Nigeria in the picture?
Like we all know, aluminium is a commodity that is widely used. And currently, Nigeria accounts for about 0.27% of global aluminium output. It's even low compared to what Africa is producing currently. And Nigeria, we have a smelter plant in Akwa Ibom called the Ikotabasi, which has been dormant for years. So meaning Nigeria has not been producing aluminium. We've been importing most of our aluminium that we've been using here. So concerning the impact of the tariffs might not necessarily have any impact on Nigeria's production of aluminium. However, we're going to see that this impact will have this tariff will have an impact on global aluminium prices. Like the US accounts for about 8% of global aluminium consumption, and the 50% tariffs has led to the US shifting demand domestically, meaning that producers of aluminium who usually export aluminium to the US will begin to diverse their attention into other markets, causing supply glut. So we'll find out that prices of aluminium will taper marginally. Why? Because the US accounts for just about 8% of global demand. So how it will affect Nigeria here? How it will affect Nigeria here is that once global prices of aluminium will reduce, we use aluminium mostly in the construction industry. We find out that building materials will reduce marginally. So marginally, this is what I believe.
Yeah, you talked about, the company in Akwa Ibom which not producing, and that's adding to another potential of Nigeria. Are there conversations about boosting local production?
Yes, like I said earlier that we have a smelter plant in Akwa Ibom. And over the years, from what I have read, I've seen that there have been efforts that have been put into place to revive the sector twice in 2020 and 2023, which have been proven fertile. But what I believe can be done to improve on this sector, because I believe that we have potential, is for the government to privatize this particular sector. This is because we've seen that privatization in some sectors have worked. For example, the telecom industry, when it was privatized from Nitel, we've seen MTN and Airtel, and we've seen how that sector is doing efficiently. So I believe that once the government is able to privatize this sector, encouraging private sector investment, we will see that the production will be able to improve. Another thing is aluminium. In the process of making aluminium, it requires a lot of energy, and that Ikot Abasi also happens to be located in a place that produces gas, which is Akwa Ibom State. And I believe that we can use that gas as well to power up this aluminium industry, as well as also build a dedicated hydropower plant that will just be used for that aluminium industry as well. And aluminium is also gotten from bauxite deposits. We have bauxite deposits here in Nigeria, and we can explore Equities and Ondo State to get these mineral resources in order to reduce the cost of production rather than import this bauxite. So all these factors, if they're all put in place, I believe that the Nigeria's aluminium industry will improve, and it will even help us to be more export competitive in that sector. Thank you.
All right, Emefiele, thank you so much for sharing that with us. Emefiele Onyelukachukwu is an analyst with Financial Derivatives Company.
Thank you, Amy.
And now let's talk about, well, safety online. That seems to be a major conversation now, with issues of accounts being hacked and all of that. We know that recently the Media Rights Agenda has asked both the federal and the state government to take legitimate measures to safeguard the rights of online users, which of course includes everyone at this point. Financial transactions are carried out online, sales, communication, data, all of them are online. So let's find out, perhaps we can get some strategies of self-defense against cybercrime with Faith Shodipo, who is a software engineer, joining us virtually from the United Kingdom. Hi, Faith. Good afternoon and welcome to the program.
Good afternoon.
Yeah,
Thank you for having me.
Good to have you. So everything is online now. We know we should have passwords that are not common, but there's also a risk to that. which is that I might forget my password. We know transactions, especially your banking apps and all of that are online. We hear these things, but it does seem like there are also consequences if I want to be strict about being safe online. Where do I find a middle ground as an average user of all these apps?
Right. Thank you very much for that. We know exactly what the world is turning into with the advent of technology. Everything is moving to the cloud. Digital assets are now being stored in the cloud. People are always on their phone, social media, churning out content every single minute. I just want to put this out that cybersecurity is estimated, or cybercrime is estimated at around 200 billion to affect the Nigerian economy. And if you look at the deeper picture of it, it spans across businesses, small businesses, large-scale businesses, and also even individuals themselves. How do we then reach a middle ground? It's tough. At one point, we are looking at, for somebody that built systems like me, we're looking at accessibility for people to just be able to do things really easy. For example, if you want to transfer money from your bank account, we don't need you to be going through lots of processes. As much as we're trying to simplify processes, we also need to look at the consequence of this accessibility. So that is when things like 2FA comes in, that people know as two-factor authentication. A good example of that is when you want to log in into your bank app, for example, allows you to be able to show your biometrics. That's some of the things that are put in measure to be able to protect these things. I would say again, everybody needs to be careful about the kind of content they put online, their information, their whereabouts. Uh, I've been in the cybersecurity industry for a while, and I've seen people getting traced down right from ancestry lineage due to the information they put online. That way, you can be able to string. If you need to do anything to them, you're able to do anything to them with that information. I'm just saying that people need to be really conscious about the information they put online. If you're not going to give your ATM card to a stranger, if you're not going to give your house document to a total stranger, I think we also have to be careful the amount of content that we put online, which is seen by millions and millions of people.
Faith, I don't know, you're scaring me right now. Because you know that, I mean, there are people who take pictures because they want to put it online, make announcements because it's going online. How much should we put online? How much should we not? Because if you're talking about housing, a lot of people show their homes, they have new things online. Graduation, school, my child has just graduated. You know, these things are just ways of expressing joy and sharing it. So how much should I put? How much should I not put? Because I'm really scared from what you said.
Well, what I would say is you're not going to stop people from putting out content. People definitely want to share their congratulatory moments. They want to share their happy moments. People go out, they put out content. Oh, this is where I am. But on a personal stand ground, I would say that less is more. Less is better. Um, I'm just going to put it out there. There's a particular guy on TikTok. I know probably he does it for content, but I know that there's a bit of truth in what he does. He picks a random person pictures online, and then from the background, from the location and the artifact and the metadata of that picture, it's going to tell you where exactly you are, the streets you are, and it's going to tell you landmarks around that area. So if somebody is doing it for fun, how much more somebody that really, really wants to hurt their next person? So I'm just saying, less is more. There's some information that really don't need to get online. There's some information that you can share within your close circle. But with the advent of technology, everybody is impulsive to be able to share this information. What I'm just going to advise is we have to be careful, scrutinize things before you put them online. Look at the consequences of what you're trying to put online before you actually put them online. Because things that happen on the internet do not get forgotten. We've seen tweets of people getting dogged out from 10 years ago when they're trying to do something in the next step of their life. And they're like, well, this was you 10 years ago. So the more information we put out there, the more information people are able to build as a profile on top of us. So I would say less is actually better. Less is more.
But would that be bad business for social media, which has become a community and a place of expression and reducing loneliness for some individuals. Wouldn't that make all those social media now almost useless?
I have a theory. I discuss with fellow cybersecurity professionals and people that were in the same field together, building solutions and softwares and digital solutions for businesses and clients. And what I say is the part of the loneliness you mentioned, I strongly believe that if everyone can put out their phones, they would understand that there's more of physical connection out there, genuine connection, than what they're finding online. What they're finding online is just a temporary fix, to be fair. So the more they put out content online, the likes, the comment, you think that people really love you, but that's not the case. What you are doing is you are putting yourself in a very vulnerable space that people can be able to build profiles on top of you, like I said before. With that information, they know where you school, they know the work you do, they know what you're going to do next Sunday, which is really risky. I mean, Nigeria is a very good place. If it was some countries, that could be really, really, really detrimental to your safety. So I'm just saying that if you're going to do it, be very moderate with it. There's some information you can put online, definitely. And there's some information you must not or you should not necessarily put online. If you're not going to put them online, nothing is really going to happen. Except for people that are in content creation, of course, that have to churn out content. Except people that they make their livelihood on top of the internet, understandably so. But if you're just someone somewhere trying to get out of boredom and then you're putting up information online that much, it is really, really risky. And cybercrime is a very big deal. People don't know the consequence of it, but it's a really, really, really big deal.
Mm. At this rate, Faith, I'm just trying to imagine what your social media accounts look like.
Yeah, so I don't have to. I have Twitter, but I don't use it. I only go there for laughs, bit of scrolls. I try to reduce my screen time. Facebook, the last time I was on Facebook was like maybe 2012. For Instagram, I only have it on my phone. I have my friends sending me funny things on Instagram. That's about it. The only thing I use on LinkedIn, and I'm also careful of the information I share on top of the social media website as well. So that's really the profile, my social profile right now. It's a bit not so elaborate, but I'm trying to keep holding as much information as I can, just to be able to reduce that digital footprint in the future.
Okay, we'll take that as a suggestion of how we should handle our social media. Yes. From you, Faith. Thank you so much for sharing that. Faith Sodipo, I'm wondering how you even came on TV. I mean, at this rate of conservation. Well, thank you so much.
This is really important because we needed to sensitize people on the disadvantage of churning out too much content. I have to say, stay very safe online. And that's the reason why I'm here, making a wide call up to everyone to be careful of what they share on social media and on the internet.
All right, thank you for sharing. We appreciate that. Staying safe online.
Thank you.
Faith Sodipo is a software engineer. Thank you.
Thank you very much.
Let's take a break now. When we come back, Anita will come in with intraday numbers. Please stay with us. You're welcome back. It's still Business Incorporated here on Channels Television. Anita comes in now with intraday numbers. Anita?
Yes. Good afternoon, Nini.
Good afternoon.
9th consecutive week. It's becoming, I don't want to call it boring like Ladi said last time, but the market is still...
Money can never be boring.
Exactly,
never.
Exactly.
Making money can never be boring.
Exactly. And take a look at the board there. It's, I would say that this market, this is what you call, we used to call the market some gains, especially when it's high, steroids, but this time is what you call a hyperdrive market. And I can't see this stopping anytime soon. So, right.
Well, I know there'll always be a correction.
Definitely that correction, but I'm sure that correction is it should still be far away, but just take a look at it here. Just about some 4,000 points away from the 140,000 mark. And just yesterday we were talking about 135.
Yeah, we had a new high yesterday. So today we have another new high.
And heading towards 137.
Yeah, I wonder if we'll have a second one. I think there's about 1,136 and 600. I wonder what the market is saying. I think you got this numbers about an hour ago.
Yeah, about an hour ago. And I think we'll be having more like a real-time movement of the market index with our guests that we'll be having just a couple of minutes from now. But first, before we get to that, let's do a proper analysis of the markets. Okay, so for our viewers all around the world watching, especially those who are investing in the domestic stock market, that's Nigeria's stock market, 1.08%. Yesterday we saw the market at 135,000 and more, but this time it closed in the 136,000 and still climbing into, almost heading into the 137,000 points. And this is just the month of July. So far, this is the 9th consecutive gain from the market, and it's coming at a time where the earnings releases from several companies. Yesterday we had a couple of releases from 3 of the big cement giants. That's Boa Cement, Dangote Cement, as well as Lafarge Africa, and so far 229% at about 3.1 trillion naira. That's the amount that the 3 of them combined they churned out in the first half of 2025. And not to mention Northern Nigeria Flour Mills, as well as some other earnings have been released to the market, and the market is slowly or highly climbing higher into the more record highs. This week, most likely, give and take, we might have a 140,000 points, but we're just counting down to the end of July, the month of July, which is at about 31.13%, and month to date is 12.7%. So far, the market is really on hyperdrive steroid, if you want to call it that way. So that's it for the market, for the Johannesburg Stock Exchange, 0.62%. EGX30 up 0.06% at 34,096.74. It is crossing to the 34,000 points. And like we mentioned, that all the markets across the African continent are really doing pretty good. Take a look at the Nairobi Stock Exchange all share index, 161.55, up by 0.4% at the close of Monday's trading session. So most of the markets across the African continent, but none can beat the Africa's #1 stock market, and most likely the world's #1 stock market in terms of returns on your investment. That's Nigeria's Stock Exchange. You just have to promote charity begins at home. That's what we always say. So Nigeria's stock market, no doubt about it, is really giving investors a real good return for their money. Now let's talk more about the market, and this time we're going to be looking at the latest. The impact of the latest flurry of earnings to the market. As first, we saw so many factors which is leading investors from the fixed income market into the equities market. So let's delve more for the other factors driving this stellar performance of the market within the month of July, which is impressively very fine at 12.7%. And we have Omotola Imafidon, equities trader with First Securities Brokers, to give us details about that. We have a couple of questions for her. Thank you for joining us, Omotola.
Thank you very much, Victor. Good afternoon, everyone.
Okay, so now my first question is, okay, we've seen, I've seen that here we have Transcorp, we have United Capital, we have WAPCO, and so many other earnings just freshly released to the market. Now, how will these earnings impact the market? We've been talking about interest rates environment, as well as the inflation rate tapering down, which is what is attracting investors into the market. So now give us more details about the impact of the earnings on the markets.
Thanks so much, Victor. So like you already alluded to, the fact that the interest rate environment is sort of lower, and the fact that a lot of more people are looking for avenues to invest their monies, the equities market provides that opportunity, and this period is the earnings H1 reporting season for a number of the companies. And the companies that are so far released, the result has been very impressive, coming off the back of the FX challenges that we had in 2024 and all the rest, and the impact of all these reforms beginning to take a positive impact, make a positive impact on the performances of the companies. The companies have sort of re-strategized, those that needed to do recapitalization, those that needed maybe to do repricing. So we're seeing that translate to the results that we saw and so far released in the market. And the market is very responsive to information such as we've seen. And as a result of that, we've seen the cement space, the industrial goods space, appreciated a lot today. That sector is up about 5% already, and the market itself, the index itself, is almost 2% up as we speak, because market is really responsive responding positively to those good numbers that we're seeing coming from the cement space. And even it's also now, so we see positive read across as well to other sectors of the market, because the low inflation environment shows that, okay, things are sort of picking up. Investors can, companies can be able to churn out better results, and people are positioning to participate and partake of the goodies that they have to offer.
Okay, so Motola, now on the side of my curiosity, first we started the month of July, which is just about some 3 days or 72 hours and less. We started at about 119,000 and currently at 136,000. What is this telling us? Is there a need to panic? And can you give us the current level of the index?
Oh, okay. So, thanks so much. There's no panic in the market. People are actually optimistic about the outlook. Basically, that's what the performance is showing us. They are optimistic about the performance. They believe that a number of the stocks that have been hitherto on the price are getting to levels that they are comfortable with, and there have been a lot of developments in the market so far. For instance, the listing of GT in the London Exchange also provided a new benchmark for the banks to sort of match up to. So we've seen a lot of repricing going on in that space, while at the same time, people feel that, okay, where are the next opportunities these companies have released? And like you also said, it's approaching the end of the month. Portfolio managers too are repositioning their portfolios to say, okay, how do we look good for mountain and the rest of it? So those are factors that we are saying playing into the market. The index at the moment is about 137,000 points, 137,875.90 points. That's where we are at the moment. And in fact, the market is up 2% as we speak right now. And that's one of the most positive performances we've seen. So market is really at record levels. The optimism level is high for the market. And I think we'll see that carrying on till the end of the month as well.
Okay, so now what are the factors that could maintain this bullish momentum? Because I had said that the market is going to hit at 150,000, I said before the end of the year, but from the looks of it, we could hit 140,000. So, but what could be the determinant of a sustaining bullish return, a bullish run, and then also what could put a pullback?
Okay, all right. So, so the determinant of the bullish run, like you mentioned, is the fact that this is most of the listed companies, they have the deadline to submit their results by the end of this month, and so we expect to see more companies churning their numbers. We're seeing from the cement space, Airtel has released, so they read across that maybe MTN too, the number will soon come out, and that is possible. I'm like to be positive, has driven that stock up today. So we expect more earnings releases to be a key driver for the market this week. And the fact that interest rate environment and fixed income space also is, coming lower. So that also is a driver for people to still consider the equities market as a positive avenue. So we see the positive run continuing, bearing any. Another thing to also mention is the fact that that the banks are also a major factor to reckon with, though they have those forbearance loan issue things to reckon with. By the time their H1 numbers will be coming out, especially those that go for audit of their numbers. So those are also, still in the pipeline. But a number of them that release guidelines says they are likely to be sorted by June 2025. So the market will also be looking out for those numbers to see how it's impact going forward. Bearing any negative joke, like maybe macroeconomic disturbances or maybe political upheaval globally or even at the local front, with those are the things that maybe may put a sort of dampener. And of course, we can't rule out profit taking. And some people may want to lock in some of this profit. So those are things that may sort of cause a slowdown. So we just advise our investors watch carefully, stay with the fundamentally viable names, and generally keep a positive outlook. The prospects look positive for Nigeria equities at the moment.
And I'm sure definitely they would hit your advice, because it's investing is a matter of you keying in at the right time in order to take profits and, of course, take advantage, take good advantage. Right. Thank you so much for your time on the show, Motola. I hope to see you next time on program.
Thanks so much. Bye.
Okay, so now let's leave the domestic equities market to the Middle Eastern markets. What we see, it's actually a close for the markets around Dubai and the Abu Dhabi, both on the United Arab Emirates. And this is coming in the midst of Abu Dhabi seeing the release of the first half financial results from major real estate and investment companies such as Modern Holding, other properties, and Multiply Group. So the Dubai was up by just a tad there, but this is the number that we had just about an hour ago. So the Dubai closed up about 0.4% at 6,172.20, while the Abu Dhabi is in the red, 0.25%. Last track at intraday, and for the Saudi Arabia and the Qatari Stock Exchange, both in the red, no thanks to the impact of profit taking on those markets. And for the U.S. markets, let's fly over to the U.S. markets where we see the stock futures are inching higher, and this is coming after the S&P 500. That's the top 500 companies on the U.S. market. It maintained its 15th record close for the broad market index, 15 record close in 2025. So we see the S&P, that stock futures ahead of the opening bell to 2:30 Nigerian time, up 0.28%, 6,440.50. For the Dow Jones Industrial Average, we see it, wow, from 44,000, it has crossed into the 45,000, and this number is expected to go higher. And this is because earnings season, across the world, earnings season, companies are reporting better than expected results in the midst of the tariff concerns, which has been pushed aside. So every companies there are now going on with the gains. We also see that gain reflecting on the Nasdaq here, 0.46%. Boeing has released its results. We're looking out for other companies to release their results. And then tomorrow, the US Fed will be making its decision whether to retain the interest rate at the range of 4.25% and 4.5%. So the markets will be all eyes out for the world's biggest economy, what the world's #1 central bank governor there, or central bank president chief, Jerome Powell, will be doing if he's going to maintain interest rate, which has been a concern between him and US President Donald Trump. And finally, let's head to the Asian markets. Obviously, Asian markets mostly mixed, but then the reds have it there. You see the Nikkei down by 0.79%, but still comfortably at 40,674.55. The South Korea's Kospi up 0.66%, Hang Seng down 0.15%, and the other two markets, just about a mixed picture there that we have. So they're eyeing the talks between US and China, the trade talks. The US President Donald Trump is still holding his trade talks around the world from EU, China, and the rest of the world, and most likely it's going to head to Australia, but for now, that talk has not come into play at the moment as we speak, but it's been progressive with other countries' heads of government. So, that's a wrap on the markets for Tuesday.
Yeah, Anita, as you noted, tomorrow is going to be a big day, the announcement of the Federal Reserve, but I think that'll be after we're done with the program because of the time difference.
Exactly.
So most likely on Thursday, we'll see the reactions to it. So thank you so much.
Pleasure.
All right, now let's head to Berlin and look at what's happening in European markets with Chiponda Chimbelu. Hi, Chip. Good afternoon. How are investors faring this afternoon? Oh, looks like we have a bit of challenge connecting with Chip. Chip, can you hear me?
I can hear you. Can you hear me?
Great. Yeah, I can hear you now. Yes, I was wondering how investors are faring this afternoon in Europe.
Well, markets are actually trading higher today. They did close in the red on Monday after initially cheering the trade deal between the European Union and the United States, INI. Now, markets, of course, did slip in the red, and that is because there was this feeling, and there still is this feeling, that Europe conceded too much to the United States in that trade deal. But markets today have regained some of yesterday's losses, and the Pan-European Stock 600 is actually up 0.4%, and Germany's DAX is up 1.1%. Now, aerospace and defense stocks are actually gaining after 3 sessions of losses, and that is because that US-EU trade deal offers 0 tariffs on aircraft and parts. But of course, INI, the dust hasn't settled this week. On Wednesday, we do have second quarter GDP data for the Eurozone and, of course, also for the United States. And then we will have that Federal Reserve rate decision on Thursday and a closely anticipated jobs report from the United States on Friday. So there's a lot of things that could move European markets this week as well.
And it looks like there's a big story coming on, a historic budget shortfall of about 170 billion euros. That's a lot. And in spite of, despite plans to take hundreds of billions in new debt, why? What's going on?
Well, Ini, it seems like it's a shortfall that will just keep on increasing, and that is largely due to policy decisions and compromises within Germany's ruling coalition of conservatives and social democrats. Now, by 2029, that is when that budget shortfall is expected to reach 170 billion euros, and that is, of course, 25 billion euros more than what Finance Minister Lars Klingbeil had initially projected. Now, one major contributor is actually the so-called Growth Booster Initiative, which offers tax relief to businesses to help revive Germany's sluggish economy. And it also means that the federal government will need to compensate states and municipalities for the lost tax revenue. Now, on top of that, new pension provisions are set to knock in by 2027, and interest payments on government debt are also rising. Now, all of that is what is pushing up public spending, and now it is, of course, increasingly looking like the reform of Germany's debt brake earlier this year won't be enough to solve the country's fiscal challenges.
Yeah, at the end of the day, Chip, somebody has to pay for this. This money has to be subtracted or added from somewhere. I wonder who will feel it most.
That has exactly been the big point that has already been discussed, and obviously there is no solution. Who is going to pay and when are they going to pay? And of course, getting Germany's budget in order will be increasingly challenging, because one of the major challenges is that the German population is aging fast, and that is, of course, also going to add even more pressure on government spending for pensions, which I already mentioned, and also for healthcare and social programs to support senior citizens. Now, meanwhile, of course, the German economy will also become less productive and less innovative because, of course, it has have that aging population, unless, of course, it can attract more younger workers. But that solution, of course, the solution for that, which is immigration, is also contentious here in Germany because it is highly politically divisive. And then, of course, we do have also that trade deal, which was announced by the EU and the US this week, which will cause significant damage to the German economy, according to the country's Chancellor Friedrich Merz. He said that later yesterday. And of course, overall, the new tariffs are higher actually for most European exports because the reciprocal tariffs were about 5% lower, except of course for the auto industry. So Germany does have a lot of challenges going forward. It is set to become less attractive for investment because of the tariffs, and of course alongside Europe as well. So we do have challenging times, and it doesn't look like we'll be turning the corner very soon here in Germany when it comes to the economy.
Yeah, unfortunately, Chip, and I hope it won't affect you too much. Or you can come to Nigeria, we can accommodate you back home.
Thank you. Yeah, I will look into that. I would love to visit Nigeria, of course.
Okay.
You have better weather.
I know, right? All right, now let's talk about some African stories. Belarus and Ethiopia are negotiating the establishment of joint ventures to assemble agricultural machinery. This is according to the Minister of Foreign Affairs of Ethiopia, Gedon Timotheus, and he's meeting with the president of Belarus. And currently, he says that their country are discussing the specifics of the establishment of joint ventures to assemble Belarusian agricultural machinery using Belarusian equipment and technology. He notes that the Belarusian machinery enjoys an excellent reputation in Ethiopia, and he says equipment, they are highly reliable, durable, and user-friendly. Over to Kenya, where the early repayment of $2 billion, that's about 258.5 billion euros, in Eurobond in February 2025, that Kenya's external liquidity pressure has eased following that. Fitch, an international credit rating agency, says that the central bank's interventions and consistent foreign inflows contributed to the reserves reaching $11.1 billion by the end of June. Kenya's long-term foreign currency issuer default rating was maintained at B- with a stable outlook by Fitch Ratings. And the agency did, however, caution that weak governance indicators, rising debt costs, and revenue mobilization constraints continue to be significant risks. According to Fitch, the budget deficit will fall short of the National Treasury's objective of 4.7% of gross domestic product in the 2025-2026 fiscal year by reaching 5.2%. It's anticipated that debt servicing expenses will increase dramatically, with the interest to revenue ratio rising to 33%, which is far higher than the median of 15% for peers with comparable ratings. And still in Kenya, the International Monetary Fund has raised transparency concerns as Kenya advances plans to securitize part of its fuel levy, which is a 175 billion shillings financing strategy, drawing sharp criticism for potentially bypassing parliamentary oversight and constitutional safeguards. Meanwhile, Roads and Transport Cabinet Secretary Davis Chichir defended the government's decision to securitize part of the road maintenance levy fund, saying it is meant to clear some 175 billion Kenyan shilling in pending bills owed to road contractors and revive over 580 stalled road projects across the country. Good news for Egypt. Petroleum Ministry have announced that it will add an estimated 4,100 barrels of oil equivalent per day to its production capacity. According to a ministry statement, the Ajiba Petroleum Company has announced the start of production from its Acadia 28 well, which targets the underground rock layer foundation. And the Acadia 28 well is currently producing approximately 4,100 barrels of oil equivalent every day, marking a significant addition to Ajib's overall production. The ministry says this production boost is a testament to the company's ongoing development and expansion initiative across its concession area. Also, the steps align with the ministry's first strategic pillar to maximize domestic petroleum production. It's time to go to the crypto world now and see what Ladi has for us. Ladi?
Yes, Ini, there's a lot happening right here in the crypto space, and definitely all eyes right now on the Fed meeting tomorrow. And I know we've been talking about, Fed Chair Jerome Powell's stance, towards rate cuts or, cutting or not cutting, and the pressure coming from Trump. So I'm wondering what happens if it cuts tomorrow.
Ha! Ladi, I can't even imagine that, because we saw the inflation, the last inflation numbers, and it was higher than expected. So I don't know, except Jerome Powell is now giving in to President Trump, then we can hear about cuts.
He gives us a good reason why.
Yeah, so I wonder what are the reasons apart from data, yeah?
Exactly, and they are data-driven.
Except to be friends with President Trump.
Yeah.
That's also a reason.
Yeah. It's not bad being friends with Trump.
You know what I'm saying?
At this point. All right, let's look at some top headlines now. See the SEC, they've extended their review of the Truth Social Bitcoin ETF tied to Donald Trump's media group. That's moved to September. A statement released, the U.S. SEC delayed its decision on a proposed Bitcoin exchange-traded fund backed by Trump Media and Technology Group, the parent company of Truth Social. The review, initially set to conclude by August 4th, will now continue until September 18th. We see global financial technology giant FIS has entered into a strategic partnership with Circle, the issuer of the USDC stablecoin, to enable blockchain-powered money movement across the U.S. financial sector through the integration of Circle's infrastructure into FIS's money movement hub. Banks and financial institutions will soon be able to support real-time transactions using USDC for both domestic and international transfers. Then we see billionaire asset manager Ray Dalio has argued that investors should allocate at least 15% of their portfolios to gold and Bitcoin as a hedge against macroeconomic risk. The veteran asset manager, that's Ray Dalio, has advised investors to put that money there as a hedge, at this point. But we know how volatile Bitcoin can be, and gold hitting a new high at this point. But is that going to work? We'll definitely find out. Let's talk to Gilbert Jopata now, team lead, Smart Investor Lodge, joining me via Zoom. Great to have you, Gilbert.
Yeah, it's my pleasure, Mr. Ladi. Great.
Right. So definitely, we like to take advice, from investors who've made it at this point. And we're hearing Ray Dalio there saying, allocate at least 15% in gold and Bitcoin. But I'm sure that's scary to some people.
Okay, so Ray Dalio has been increasingly vocal about the diminishing trust in fiat currencies, due to excessive money printing and also geopolitical instability. But then he has been having more like an evolving stance, alongside his long-standing support for gold. So he has an evolving stance for Bitcoin, and I think that this his stance for Bitcoin and gold is more like a reflection in his belief in diversification and also hedging against monetary debasement. But then it will bring you to the question, why Bitcoin or gold? Gold has proven to be a long-term inflation hedge for centuries. Then Bitcoin, due to its digital scarcity of just 21 million, and also proving to be a long-term store of value. So Ray Dalio is known for this word we always use, in the financial market, cash is trash, which he says is the worst investment, over time. Then for me, I think that Ray Dalio's 15% allocation is more like a reflection of a realistic approach in an uncertain monetary era.
But Gilbert, I'm wondering here. Gilbert, I'm wondering, because both asset classes, they're at all-time highs right now. Bitcoin is close to, the high of about over $120,000. Gold, that's touched 3,004, 3,5. So they're both near highs. So it just seems scary, allocating at this time. Or should we wait for a pullback?
Okay, so first of all, if you've held gold or Bitcoin in your investment portfolio for the past 10 years, you would have outperformed the great Warren Buffett. So there are two approaches in the market. First of all, when you're looking at a store of value, what you're always looking at is what you're buying over a longer period of time. Will it be able to have more value? And then that is where you start looking, has gold been able to prove that it is such an asset, or even Bitcoin? We know Michael Saylor keeps buying the top of Bitcoin, but is he a profitable investor? Yes. But then Warren Buffett is someone who likes sitting in cash and also wait for drawdown and also bear market. So it's just your approach to the market. If you're looking for something, you just want to dollar cost average, and you know that over a long period of time is going to increase in value, these two assets will do the work. And then if you have more like a value investor approach to the market, where you want to sit on cash and buy at a price which is suitable for a value investor, then it's up to that investor to make such decision. But then I still think that gold and Bitcoin is still my view, will still continually outperform stock pickers.
Right. I guess it's a digital gold and gold at this point. But we have Max 7 companies reporting this week, Amazon, Meta, and others. Any impact to Bitcoin?
Well, I think that while any reports are coming in, what will be more important is tomorrow's FOMC decision, because the market is holding its breath, based on that. And yes, I know that any report at the end of the day will still have some kind of impact, but I think that right now we don't have retail FOMO in the cryptocurrency market yet. And that is why you still see stocks are also, surging, but we are not having that kind of surge in the cryptocurrency market yet, because we don't have retail FOMO yet. But then tomorrow's FOMC decision is where I think everybody should be putting his attention, because that's where the impact is going to come from.
All right. Thanks so much, Gilbert, there, for breaking it down for us. All eyes on the FOMC.
Yeah, thanks for having me.
So, there you have it. It's red on the screen at this point with Bitcoin. They're still marginally down 0.01%, but still holding on to that 118, 119,000, psychological level at this point.
All right, Laddie, thank you. And that's it on the program. Thank you so much for being a part of Business Incorporated. Today we have another episode tomorrow, but I'll see you tonight. Maybe we would hit 137,000. Maybe. Fingers crossed. I'll see you later.